Hi there. ICP is down by about 7.5% this week. And however, it's stabilizing above the red key level of $2.05. So it's time to look at it and see whether the whales are really trying to set a bottom at this point, at least for the short term, before much economic data comes in. If you're new to my session, I'll cover the Wyckoff stage, potential price trend change, as well as key price levels. These are education content, not financial advice. If we look at a weekly chart, for 3 weeks, the price has been staying above the 2.05 red key level. This is a level set by the October 10th tariff announcement date. If we look back to the history of ICP, it's not a level being tested before. So, as of now, if we look at the volume, it has been declining quite significantly. It's almost half of the beginning of the month. So, seeing red candles with lower and lower volume is actually considered a positive sign during this kind of situation, because it's not crazily selling, no big hands or no powerful hands pushing the price down. Let's put it this way. So you can consider the whales aren't really trying to shift any further until the point they get news coming in to do that. Okay, so March economic data is going to be key. Okay, if it's not particularly negative, in towards like liquidity or risk on sentiment, then we can comfortably assume that 2.05 to 2.80 is the base case sideways trading. Okay, if positive news comes in, of course, we can aim to see the confirmation I've been talking about weeks, the sign of strength, meaning sustained price climb combined with higher than average volume, re-challenging the range between 4.35 to 5.18. Okay, that's the confirmation we need that the market is once again ready or warming up to another risk on period. It's not that easy, may not be early, but that's the sign we need to get. And after sign of strength, the whales can still shoot the price down, like what happened last year and like what happened over here back in 2024. Okay, so even though it's not like a straight path towards the next distribution, it's still a stage or a step we need to see. In terms of daily, the downtrend is still going on. The price is still around the weaker half of the channel. So what we want to see is that while it stabilizes above the 2.05, it better move back up to above the yellow dash line of 2.24. You see, it's still being suppressed today by that particular line. Okay, so let's hope that doesn't stay as low as where we are now for too long, because otherwise, that means the bulls really has a hard time pushing the price back to above or to the stronger side of the channel, and that's not going to support the case of breaking the downtrend. Okay, we already mentioned before, March 11th, April 16th are the 2 dates that we can see formed by the ceiling of the downtrend and this intermediate level. Of course, the red key level will point to a near end of April date. So we can move this across and show the date 28th of April. All right, if the price really can't find support, the bulls really can't find strength, we probably have to wait till late April before the trend change confirmation comes in. If you're interested to access these sessions 2 days earlier, join the channel membership now. Here's another analysis for you. Thank you.